The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, back again. Did John Logan's show this morning at 8 o'clock. Back here at 11 o'clock to do the Tiger Technicians Hour. My pleasure to be here Monday through Friday on market days. Wow. What do you think I can say about the market? Wow. This is quite something. I've drawn in here. Here's the E-minis. I showed my subscribers this morning. Good chance that even though there could be a phantom peak, there could be a peak D or a peak C1, C2 right there in the 120-minute chart. Look how we've turned around. Yesterday, the Dow was up 275. Today, it's down 198 at 17,696. S&P's down 18 at 2,047. The comp index is down 35 at 4858. You've got gold down 1 at 1150. Wow, gold should be up, but it can't even get going here. Why? Because the dollar has not given a signal yet. In the 120-minute chart, it gave a sell signal from that peak E-top. Yesterday, I discussed it. Pulled back quite sharply. That was the sharpest decline it's had for a little while. But it didn't want to stay there. Instead, it attempted to hold support and then succeeded in holding the 9-period moving average in the 120-minute chart. This is the dollar currency, the dollar index. And it went to a new recovery high. This is leg F/B in the daily chart. I'm calling it leg C just for now. It could be F/C in the 120-minute chart. But look at that weekly. Now it's starting to go parabolic in both the weekly and the monthly. But it's only leg B in the monthly as I read it. For the report that I'm sending out, probably Monday. I hope to have it out, finished by, I've got just so much stuff to do, and plus the usual commitments over a weekend, plus the Boston Symphony Chamber plays on Sunday afternoon. I hope to get this done. And it's my follow-up report from my webinar that I gave back, I think it was the 19th of February. And what's really important about this is that I'm trying to get it done by this weekend, but I can't send it out. It has to go to TFNN. They send it out via email to all my subscribers and all those people that have just a host of, just a large number of people that have a trial subscription and are really wanting to know what's going on. And I hope to give a lot more information. In it, I talk about deflation, what it's going to take for us not to have this commoditization of everything, not just commodities, but the commoditization of everything from computers. Think about it. We want all the countries of the world to do better, right? Within that, what you want is basically you want everybody to be buying goods. I mean, it's based on capitalism. What is capitalism? Capitalism is based on the fair exchange, sometimes unfair, of goods and services. In a so-called free market. We know that it's not a free market, but as free as we can get, and it's one of the freer markets in history. Within that context, is there a period that we're going into here that says, yes, there's the potential when the Fed finally says, I've got to do something, that they work their magic on the wrong way, because they have definitely worked their magic on wanting the stock market to go to all-time highs. They said that, they've done it. But what happens when they lose control? And who's to say that these people are... It's easy enough to print money. It's really difficult to contract the money. In other words, to get it back again, to contain it. It's very, very difficult to start an inflationary cycle when, in fact, you've got major commodities, oil, gold, the soft commodities, all acting very poorly. I don't know if I can do that right now. Yeah, I'll try to do it during the break. No, I'll do it right now. Look at this chart. This is the Thomson Reuters continuous contract and commodity index. It's a commodity index. Look at this monthly chart. Isn't it looking very much like the gold, like the crude oil? Look at this. I'm just going to overlay these charts. Here we go. GC, gold, monthly. Here we go. Crude oil. Here we go. Copper. Do they not all look the same? They all look like they want to test key support levels lower down. And for some of them, it's on the left side. And for some of them, it goes way back. And this, to me, says that we're in a period where the dollar, look at the difference in chart patterns. Look at this dollar chart pattern. This is a very long-term chart. In fact, let me squash the daylights out of it. There we are. Look at that. Once upon a time, the dollar was, in 1984, 85, it went to 164.72. It drops down to 83.03. I remember this so well back in April of 2009. Even as I'm talking to you, I remember the picture walking down Devonshire, I think it was, Devonshire down in Boston, going to meet with Fidelity clients to discuss. And as we were walking, I said to my partner, I said, hey, I just got a major buy signal in the dollar. Well, the dollar went from 78.33, retested. 78.33 was the low back in 1992. But this was 1995, April of 1995. It went to 83.03, a higher low. And that's the low I'm talking about. And that went to 121 round number high. I wonder if it's still 121 round. Yep, it is. Sometimes these prices change. We had a left side, right side price time match. I remember being on the air as the monthly chart broke that left side 83.03 low, and I said, uh-oh, if there is a continuous pullback this month, that's going to be very negative, and the dollar went down to 70.70. And then every rally since then only had it going to the 90 area, 89, I think it was. Yep, 89.62 in March. That was from the low of March of 2008 to the high of 2009. Pulls back, goes to 72.70, a higher low. It goes back again, and then it starts that climb. And look at the cup formation that's forming right now. It's like a bowl formation. In fact, we've broken from major left side high of 92.63. We've broken above the 99.25. We're about to tackle the high of 102.15 in the dollar. And no matter how I count it, this recycle can't be a brand new H. There's no H. It has to be a B. And if you put it together with the euro, I didn't even do the euro. Look at the euro. Is that not the same pattern, the lowercase h that goes to an M that breaks down? So it's going to take a lot to get us out of this deflationary era and to see an inflationary era. And I suspect what we would have to happen, because we've got, at least at this point, we've got a relationship between the dollar strength and almost all the commodity weaknesses. I suspect that we have to think that maybe when the dollar finally pulls back, that's when there's a chance that we start to see a very sharp move up in the commodities. My suspicion is we're going to see it first in gold. But first of all, in gold, I said this so long ago. I said this maybe 2 years ago. I said when all these new stores that have opened up that say sell gold, buy gold, I see the for rent of empty stores, that's when I think we get a major low in gold. Either that, or when the stock market actually starts its really big decline, which at some point will happen. I'm thinking that this is I'd said February, or was it the 19th, whatever it was, when I did my webinar, I said that particular period is one of the most important periods that we've seen in a very long time. Why? Because the phase that we're going into, where I believe we should be having some kind of a correction. I don't know, I said, whether it's going to be another rotational correction, meaning that we don't drop all that much, but some sectors start to top out, and while others start to come on strong. And that's really the issue. And now there's a lot more clarity, and I hope that this paper that I send out early next week at least give some kind of clarification of what I'm looking at in the big picture and what sectors I suspect for the next big up phase. And I think that there's still to be another big up phase in the market. That's the one that becomes the most dangerous, but the most beneficial to playing the right sector. And it's going to be tough because on the one hand, you've got your foot ready to hit the brake, and on the other, you're going to get the same, not the same acceleration as you saw in 2000 in the NASDAQ, but something that replicates that. I think it's still missing in this particular market. Meanwhile, we are vulnerable on the short to maybe intermediate term to some kind of a pullback. And it looks, if we don't know where we'll close today. If we close closer to minus 156 in the Dow, minus 13 or more in the S&P, there's a real good chance that the correction is continuing. And let's just go from there. Let's go to the numbers. We're looking also at I didn't discuss the commoditization of bond yields. That is really important in my work because it says that the pattern that we're looking at, the H that goes to an M pattern, is something to keep in mind. It's occurred in so many of the areas. It's also worked upside down. That's the pattern that says you can go into an intermediate term rectangle formation where the low is established, the high is established, and you just bounce around making these arches or soft WU formations and just keep bouncing around within that. But most importantly, what I'm going to be looking at, I didn't even expect to be doing this kind of a monologue right here. It just came about. It came about from the market. And as Dave White often says, I digress. I do not digress because everything that I do has to be linked. Even though it sounds like I've moved away from something, it's that particular, whatever it is I'm looking at, that spurred the thought of the next coincident factor. So I'm not digressing, I'm focusing. And the bond, the 31-year, actually a 27-year up channel is continuing. We are still in that up channel, but look at what's happened here. I don't have the data anymore. I used to have it. I have it on file, but I don't have it live. Look at the chart formations that are there. They all just disappeared because this is the continuous contract, and the continuous contract got smoothed out. And what we're looking at here is a peak E, 167, 18, 30 seconds, 167, 13. A peak E has formed in the monthly chart, and that says this is probably the most critical phase that we've seen in the bond, long-term bond chart, in that if it does not break at 159.5, if it doesn't break, this is a continuous contract, under 152 to 149 in the next 2 months, but instead just stays here, the Japanization of our bond yields could continue for a lot longer, and we might not get, even if the Fed wants to start spurring higher rates, they might not even get it. Hey, we got the first break coming up. Dow's down 201, S&P's down 18 on this Friday.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Yeah, we are. Repligen Core RGEN question of the den. Please analyze. So it's in leg E up in the daily chart. Must be news related. Very good candle. The stock that I mentioned yesterday, we were trying to get and just missed it. I didn't even know that there was a financial report out yesterday. Had I known, I would have said, whoa. VST, I'll come back to this in a moment. I just wanted to show something because same category. Look at this. Very stem. Remember, I tried to get it yesterday. We just missed it in my Traders Corner for my opening call. Had a spectacular move. Well, the loss was way less than everybody thought. It's still huge, 54 million. I don't know what it was. But look at this, leg B up in the daily and leg B up in the weekly, and just starting a nice move in the monthly chart. Very tough to get in because it is a biotech. They can fail at B. This one should go to a C and a D, but look at that. All right, let's go back to Repligen RGEN. And what we're looking at here is if you're long, if you're trying to get in, it's very difficult. Not only that, I'm absolutely convinced that this is the late stage. I think that today there's a chance that we might have seen a high, at least a short-term high in the IBB. We'll be looking at the little close-up. Let me show you something here. So, well, what I'm saying is if you're in it, what I would do is I take some money off right this second at 30.43. It went all the way to 32.19, I think it was. So I would take some money off. In fact, I'd take quite a chunk of the money off. I'd keep a core position. they'd call position and I'd say, hey, I'm going to have some patience. If this is news related and only news related, and it's just a single 1 day kind of a splurge to the upside, breakout and splurge, I'm going to wait for a pullback to the 28.30, maybe 27.50 level, and 26.68 is the 9-period moving average. It'll be lower if it pulls back, so let's call it 26.40s would be a stop. And I would only do it in a small position. What you really want to see is to say, oh, man, I'm wrong. I'm taking my money off, but it's only pulled back to 29.20 or something like that. It's a 30.40 RGEN. Up 3.58, up 13.35%. And then you want to see it work its way through the 120-minute chart to make a rectangle formation and have a peak ABCD, what I call an inside buy mode within the 120-minute chart, trying to get back toward exactly 2, sometimes it's on the nose, and maybe just a tad higher than the high that was made today. And then you have to take a little bit more off, and you have to wait again. So that's the only way I would play it because of the way it's been. And I do, I could be so totally wrong. Let me show you something here. What is the BBH? So let me just look at the BBH for 1 second here. Did it do? Oh, look, it failed to get there. Very interesting. So that's leg D. Oh, I love this. When I've got 2 indexes that are based in, the one is the NASDAQ, and the other one's the broader biotech. Those are the market vectors biotech. Look at that. Leg F maybe could have recycled, but I'm calling it F for now in the monthly. Peak D by Friday today at 4 o'clock if there's no new high, and a failure pattern in the daily. Now look at the IBB. Whoa. IBB spiked to a new recovery high. So 348.98 was the previous high. And then it went to a higher high at 349.30. Only 40 cents, less than 40 cents higher. And then it pulled back, but look what's going on here. And look, did I show my subscribers this morning? I've just done so many charts lately, especially with the paper that I'm doing. Anyway, look, the left side high of March the 5th went to 348.98 with a MACD good, the stochastic lower than it was previously, but still up in the 91% area, and then it does this today, and it spikes to a new all-time. This is not just a high. This is an all-time high to extend leg D in the weekly chart, just like the BBHs, the S&P Biotech. And look what happened. It went to that E. I'm calling it E for now. We could call it brand new A, but I'm calling it E because the stochastic's way down at 68%. The MACD has actually turned negative. And look what's happened. The 120-minute chart has the pattern that I call, where's my CD? Is that it? Yes, my CD. This is a pattern that you might want to learn, especially now that we're going to highs in some of the sectors and some of the stocks. And it is the drop bucket formation, chapter 22. Chapter 22. This is the drop bucket formation. I always give these nicknames. You'll never get into any book of note in the technical in the Technicians Association if you give things names like drop bucket and falling axe. It is the double top formation failure pattern, and there it is. It's in chapter 22, slide 367 onward. And we're going to go to a break. Dow's down 238, S&P's down 22. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
How many times in the last week, especially with the extra shows I've done, you've seen charts go to at least a PT? Remember in the chat wave what you look for in Technical Friday? Let me discuss this. Look for the lowest low bar and at least a D. That's where other things can happen. Look at the BBHs. They went to a D at an all-time high at 132.80. They're trading at 129.69, down 26. Down 0.26 today, having tried to get there. We're going to 131.66, missing it by 1.25 points, whereas the IBB did go to the high and then squeaked above it for a high today of 349.30, 349.30. And that says to me, watch out, because my rule of thumb is that in the pattern that I call the drop bucket formation, there it is, drop bucket formation, if you go from the left side lip above it, the price can come back if it goes 1/3 to a halfway down from the lip, left side lip to that base, in this case 348.98 to 337.41. And it closes a half, at least a third to a halfway, there's a really good chance you're going to test the low. And that's 337.41. If you break the low, the next rule of thumb is you can go 1-to-1 to the downside. And that would be 348 to the 337. I said, yeah. So this is, for argument's sake, call it 11 points. That means you can go 11 points down. Now, where do I take the 11 points? Theoretically, I should say it's the low bar that can take you 11. I'm always a lot more cautious, so I take it from the previous peak of significance. So let's just use this particular example here. I'll show you both sides of the coin. Look, right there. So that's the height. That says that would be your target if it was a perfect 1-to-1, which we don't know yet. I can't skip a stage. I want to go stage by stage because that'll take you down to the 326. There's nothing. There's no support at 326. That's not good enough for me. I want to go back and I want to say from that high, the bar that made the low, the first level, if you take out the low, then the next level of support will be 337.41. That is I'm sorry, that's the low of the 10th, and and the low that I'm looking at here would be right on the 200 period moving average. That's the simple moving average of 334. So that would be the next step. If that gets taken out, then all of a sudden I say, okay, I could do it from the doji candle high, but I just go step by step. I grab that little vertical bar and I just move it along, and that to me would be it. But by that time, I'm already drawing in a pattern that I say to myself, wow, this looks exactly what I'd be looking at here if there's a failure. Why? Because on Monday or Tuesday, fund managers have been rewarded every single time. To today even, they've been rewarded by grabbing this little baby, buying it, and saying, "Whoo, you're going to save me from all my mistakes." This is the pattern that I'd be looking at right here. See that down channel? And then I'd use it to the left side here, and I'd say by the 17th of March, the IBB should be trading at 331. And I'll make it as simple as that. There's just nothing else to do. But I have to go step by step. All right, so I hope that helps you. Just everybody's got their techniques and they share them with you. And that to me is a technique that I think is viable. And I'm making it real simple. A breakout to a new high says, hey, I'm just not ready. I've been rewarded every time and I'm going to be rewarded again. That's simple. All right. So we got caller. Whoa. I turn around to the right. Let's go. We got Brenton Martinez. I'll have to rush now. Brent, how are you?
I'm doing just great, Basil. How about you today?
I'm well, thank you. You'd like to look at? Oh, don't tell me you just shorted Alta at the opening. Come on, tell me that's what you did, right?
Of course I did.
Bravo. You know what?
It put in a nice round number on top of everything else, too.
Oh, and a 156 round number high. Oh, it had everything you needed. Leg E on a Friday, a gap up to leg E on a Friday, going to a round number all-time high. Your risk reward, that's really what we're looking at. Whether or not you're right is not the issue. Well, of course it's the issue, but it's not the issue in terms of implementing a plan. And I'm just going to say to you, it was on my list. Even last night, it was on my list. I've been so busy with this darn report that I'm trying to get done in time that I didn't spend the time on Alta. And I even mentioned to someone in the den who I am the other day to say, what about Alta? And I said, I think it's about to make some kind of at least a short to intermediate term top. I don't know if I'm right, but let me tell you, leg E in the weekly, leg E in the daily, possible leg F in the monthly, F/B, because it is a great company. 90% in the stochastic. MACD's expanding. Alta Salon Cosmetic and Fragrances just been an unbelievable winner with really whippy action. But so far, all it's done is it spiked to an all-time high, and it's giving some of it back. The high today was 156. It's trading at 149. That is only 6 points off the high, 7 points off the high. We can't really say for sure, but the MACD's MACD's good, but the stochastic's way low. There's a divergence. I think it will fill the gap from 142 to 140, 142.90 to 142.60, and then 140.20 would be my downside targets. That's going to be important. Hey, congratulations. That's fantastic. And thank you. Thank you for doing it when I should have been doing it.
All right, have yourself a wonderful weekend, Basil.
You too. Let's see what happens by the close today, because it is a very strong stock and it's pulled back quite sharply. Let's see what happens. Hey, congratulations, Brent.
All right, take care, Basil.
Thank you. Have a good weekend. Let's go to Marvin in Orlando. Marvin, how are you?
Hi, how are you? Thank you, Basil.
Yeah, good. Thank you.
I wanted to see if UCO, if there is a good entry level and where the stop should be, maybe.
Okay. UCO is, in fact, let me just get this right. This is the ProShares Ultra Bloomberg crude oil long side, and it is going down. So it's trading right now at 690. Let me tell you this. The level that I'd be watching is the left side low of 129. Now, let's just say someone was long this position. Where would you put in? It's very difficult because anywhere, you remember I was just talking about the upside where I said that whatever, the IBB, no, it wasn't. What stock was I talking about where I said that it could go to or just under or just above? Was that too many stocks? I can't remember. Anyway, I showed a chart and that exact pattern of the Y, the backward Y, lowercase y, going back to the left side high, where I said you could get an inside buy. I think it was Repligen or whatever that was, RGEN. Let me see. Yes, it was RGEN, I think. Yes, I was talking about that in terms of the 120-minute chart. Okay, so this is the exact opposite. We're looking at UCO, and it's based on crude oil. Crude oil is looking terrible. And what I would just say to you is this. If at 69, if you have no position, I'd say you have to wait for a test of the candle of the 29th of January with a low of 6.54, a high of 7.97, and that's going to be, 6.95 and a low of 6.54. Why? Because if it takes it out and then doesn't bounce back above 6.54, what will happen is if the next candle is even worse, it's going to continue going down. On the weekly chart, there's a really good chance with the MACD trying to rally and the stochastic having a positive divergence that somehow or other, and I'm going to try to relate it to actually, you have to also be looking at the dollar. The dollar is in leg, let me see in the daily, F/B because it went to a higher high. And the 120 minutes just recycled. Oh, man. All right, let me put it this way. If you haven't got it, I would wait because you need to see how it tests out, and you need about 2-3 days or a V-shaped pattern that pushes down, breaks, preferably doesn't even break the low of 654, and then makes a V-shaped recovery, and within 2 days, it's actually back at 762 to 774, maybe even 791. That's going to be really important because if it doesn't do that, it's going to make the H, the lowercase h that goes to an M pattern, and it's just going to fail. So if you are in it, I can't tell you at 6.89 to put a stop in 1 penny below 654, which is what I'd normally do, because it could go underneath there and then close above and then start to move to the upside, and then you could be taken out, and it would be right back to where we are now at 6.89 in a split second. But I would say to you, at 6.88, if you're prepared to hold it, you will get back somewhere between 688 and 773 over a period of a few weeks. But I personally don't like to do that. So here's my question to you. It's a question only you can answer. You have to say to yourself, are you actually, let me ask you, are you long?
No, not at all.
Okay. If you're not long, I'm just going to say, hold on, because I don't want to buy the weakest link in a weak commodity sector, one of the weakest links. I want to buy it on strength. And that says to me, you've got time, because if it does turn around, it's going to do some backing and filling, and then you'll be able to get in. So I'm just going to say to you, hold off, don't do anything. Give me a call. Today's Friday. Let's give it 2 days, 3 days. Give it until Tuesday or even preferably Wednesday, and let's look at it again. Maybe by then it'll be ready for a bounce, because the dollar might, in fact, at that point be in leg D in the daily. We'll see. So I hope that helps you, Marvin.
Okay. Great, thank you.
Thank you for calling. Let's go to George in New York. George, how are you?
Basil, good morning. How are you?
I'm well, thank you.
So it looks like we're thawing out now.
Yeah, we're
with
thawing
the weather
out.
getting
They said there'll be some snow, but at this point, you know what? I have a mindset that when I get to the middle or end of February, I'm already changing my whole attitude changes because I'm thinking of the spring and playing outdoor tennis. So I don't care what comes along. I know we're getting quicker and quicker to the spring, and that's all that counts.
Yes. Well, I agree. I feel like I've been a bear that's been hibernating, but I'm starting to thaw out and getting a little hungry. So with that said, I'm looking at Royal Dutch Class A.
Okay.
RDSA.
RDS.A. Let's see. I don't think I've ever done that. Here it comes, first time.
Here's my question to you, and you could do this, and I could check back with you during next week, maybe. Looking at a monthly chart, where would you say is the correct point to start building a position?
Okay.
Because I would like to really hit it at close to the lows, because it gives a healthy dividend. And then just to ride it up.
You know my belief in dividend stocks. Don't take capital losses when you're trying to get 4, 5, 6% on dividends, because it'll never make up those, and you know that very well.
Agreed.
So we're in agreement. It's taken out the low of 57.97. That was the low of October of 2011. The month is not finished, but it actually has gone below it. Mm-hmm. So this is what I'm going to say to you. It appears to me that we are within 1 to 3 weeks of seeing whether crude oil is about to form some kind of a base with maybe gold to have a counter trend rally. It could happen next week. It could happen first or second week of April. That's when I think that's the best time to be looking at these stocks, because once you get into what would be the summer season, even though these guys look so far ahead, they don't really. It doesn't really matter which season, because they have to plan in different ways. That's probably in the cycle that I look at. This spring, in our spring, is probably the time to be looking at anything to do with oil. So I'm thinking that, as far as I'm concerned, based on the monthly chart, I have no clue whatsoever. But based on the weekly chart, let me just check it out, because I remember looking at one of these stocks that had a very similar pattern. Yes, I'm going to make the suggestion that you wait for the 53. It might not get there, but that's okay if it doesn't get there. Boy, I hope it doesn't get there, because let me tell you, if 53 to 49.16, the low of July of 2010, if that's taken out, this is really bad news.
That's what I'm looking at. I'm looking at that 38 low.
You see, I just have patience. I don't think I'd even to nibble at a position. Let's see how the 55
because it broke the monthly trend line, and that's my concern now.
That's right. It's broken the horizontal support.
Yes.
It's broken the I could do this right. Yeah, let me just do this. I've got another way of doing it. From highs to midpoints, and that you take right there.
But there's no rush, because I stalk. So I just sit out there and I'll stalk it for months.
Okay, well, if it's going to go down to the 57, if it's going down to the 49 level, let's see how the 55 to 54 level holds over the next week and a half or 2 weeks, okay?
Very good. Appreciate it.
Thank you very much for calling and putting it on my agenda. I'll be back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartleys, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
Learn about good health and fitness. Living a primal lifestyle with Nico and Paige. Next on TFNN.
Hi, folks. We're back down on 245, giving back just about all the gains of yesterday. S&P down 22. We saw this before, you remember? Huge up move and then a sharp down move, and I just have to tell you, you got to be careful now. I've been talking about this for a while. I do believe that we call it at this point a consolidation, but look at this down. Oh, I want to just mention too, before I forget, I wanted to mention to George that the XOM, which is one of the better integrated oils, there's that pattern, that arch formation. Look, left side, right side, price, time match going up in 1, 2, 3, 4, 5, 6, 7, 8, 9 months, 9 bars. Oh, it was 10. 461. Yeah, it was 10, and it's come down in 1, 2, 3, 4, 5, 6, 7, 8. So it's come down in a shorter time span. Yeah. just a 1 month early, but it's breaking the left side, all those left side lows. That says be careful, because the next major support level is 77.13 on Exxon. This is serious stuff. That's the reason why, we're trying to get 1 or 2 long positions, but basically it's the shorts that we're looking at. Added again today. It's just, this is a very dangerous market, and it's at this point, I'm trying to place us. It's been hard. We were in the Dow Dimes 300% short, and we just got taken out for a very small profit. And I didn't have a chance even to get back in. I wanted to get back in, but look at this. Remember, when I was interviewed with Tom the other day, I was speaking about the sandwich effect. Spoke about it earlier on this morning as well when I did John's show. Look, sharp down move. There's a Chapman wave Roman candle, inside bar, sharp down move, inside bar, sharp down move, and then a little bit lower, and then an inside bar, and then pow, another sharp down move. I think that is telling us that this is a dangerous market. 17,620 on the Dow is really key. It's very important, folks. You've got a great program coming up now. It's all about health. You've got Nico and Paige. Please listen. You've got shows all the way through the afternoon. Just great shows, and please listen to TFNN. Let me just say once again, for my subscribers and for those people on the trial, I will be doing my very best by the end of the weekend to get whatever I can in my special report, a follow-up report. It's the second follow-up, actually. I'm calling it number 1 because it's the first printed one. But last week, on the weekend, I sent out chunks and chunks of charts that we were looking at. This week, I'm trying to set it up so that I can show you the big picture about the possibility of deflation rather than inflation. It's a possibility. I hope it just doesn't work. That's the worst scenario. And what it would take to get some kind of inflation, what happens in the commodity index. I'm going to be talking about the dollar. I'm talking about a whole bunch of things, showing charts, showing as well as the socio aspect of skyscrapers, the whole shebang. And that might be followed up in another month or so with another one, because this is such an important 2015, a very important year as far as I'm concerned. So real quick, the Dow is down 237. If on Monday it takes out 17,600 support, that's really critical, because right then you're going to start with the arch formation, which says be careful, because you're going to be looking at a left side, right side price time match going into somewhere around the end of March, maybe the first week of April at 17,000, a test of the February 2nd low. So what would it take? It would take a spiral. Look, we've already got rid of all this, gone. And it would take, look at the VIX index. It made a peak D and pulled back yesterday. Now the VIX index is at 16.58. It's still not showing anything abnormal right now. So if this VIX index by Tuesday or Wednesday of next week, and the short-term trading index, oh yeah, it did pop up to 2.30. So, okay, as we wrap up, keep in mind, got to be real careful in this particular market. You need the VIX to go to the 17.5, 18.5 area to sustain the down move. And as far as rallies are concerned, if the VIX pulls back to 15.50, the market will rally once again. Hey, have a good weekend. Be careful.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.